I can't see us going into any more lockdowns, but if we did have a prolonged COVID and with these variants and stuff, what stocks or sectors can you see benefiting, or what are you looking at these
Well,
days?
technology is gonna be a clear winner because even if we don't have any more lockdowns, we still have some sort of lockdowns going on in a lot of states. And you have companies doing their own version of their own lockdowns where they're saying, stay away from the office. So we're only going into the office every, 2 days a week or 5 days a month. So which, and if it continues, it looks like that's the trend right now. So and even all of these people that are still unemployed and maybe eventually will get a job, since now they cut the unemployment benefits and now they have no more reason to stay home and collect all this money for nothing. And now they'll be forced to go out and get a job. And companies need to hire because they're not producing enough to sell, which is hurting their bottom lines. So there's the snowball effect on there. But it looks like now, hopefully, with unemployment ending, with the subsidies ending, people are going to need to find work, and those people are going to re-enter the job market. They're probably going to work from home, a good chunk of them, and with the continued trend of companies that say work from home, technology seems like the way to go because they need to invest in more software, more hardware to give people the tools that they need to work from home. They need cams, right? They need cameras, they need these headsets, they need everything. um, so it's that's going to be a clear winner, I think. Then you have the Door Dashes and the Uber Eats are going to be a clear winner since people are staying home. That industry seems to be exploding. Takeout, and people don't mind paying an extra 20%, 20 to 25% premium on lunch or dinner.
I've actually been doing some DoorDash on the
Yeah,
side. I just started this week, and yeah, I mean, figure your lunch.
right,
I've been doing around
right,
afternoon and evening. I mean, it's 20-30 bucks, and then the
right.
DoorDash fee is another 10. So
And
yeah,
guess what? It's all
it's
your age group that's doing this. They're the ones fueling DoorDash's revenues because it's like, I don't feel like going out. You know what? Let me just DoorDash. I don't feel like getting in the car. I don't feel like going for a walk, which is kind of sad because it's like we're becoming a. I've said this for many years, many years. I says we're becoming a society of hermits, and you know what? Technology and convenience is doing exactly that. I wouldn't be surprised if in 100 years, 200 years, you see those movies where there is no more outdoors. Everybody's just indoors, and it's sickening and it's scary.
when it gets to the point of convenience that we end up like if you see in the movie
Right.
Wally, the people are all huge and in
Yeah. Yeah.
wheelchairs and no one
Yeah.
moves.
Yeah.
But
It's sad, but that's what's going on. I think those stocks are going to benefit from the increased spending on. And again, no one seems to mind. All these people don't seem to mind paying an extra 25%. So let's say a $10 cheeseburger is now costing you 15 to 18. Yeah, I don't know.
I can see that side of it, and then at the same time, though, the other side I see is like getting to the point where maybe everyone doesn't need cars anymore, and then you're saving money in that regard. But I don't know. We'll have to see how it plays out. It's definitely changing rapidly. If we were to get a correction, one possible cause maybe could be. I mean, at this point, the tech stocks and specifically the big five there: Amazon, Apple, Microsoft, Facebook, Apple. Each earnings report, they continue to do the impossible. They continue to earn more money. I feel like at some point that's got to level off or even decline, and maybe whether that's from reopening. But I feel like if they were to report bad earnings, that might send a little shock to the market, and because they make up so much of it, I mean, if we're going to have a correction, I feel like I could see it happening from that over an Evergrande or the Federal Reserve cutting stimulus.
That's right. And also keep in mind that almost 50% of the stocks in the S&P 500 and the New York Stock Exchange are already in correction mode, already down over 10%. One of the things holding this market up, and it's going higher and higher, is the Apples, the Facebooks, the giant, because their market capitalization is so large that every $1 price movement on their stock sends everything soaring. So one of the reasons the market is so high, that the Dow Jones is hitting new records and Nasdaq is hitting new, all of them, well, the indexes are hitting new records, is mainly because of these monster companies, because of these Apples and the Microsofts. I mean, you picture Apple's over, I think it's at $2 trillion. Did it break 2 trillion? I can't remember.
Yeah, they definitely did. I don't know if it's still over 2 trillion, but I
And
know they broke
Microsoft
it.
is right behind them at 1.6, 1.8 trillion.
Hmm.
Amazon, Google, all of them. Okay,
2.4
2.4
trillion
trillion.
Apple's market cap.
It's insane. So, we look at the stock market going higher. You know what? Yeah, it's going higher because of Apple and because of these giants making these huge moves. But in reality, the market has corrected. But here's the sad part: when we do have a major market meltdown, the companies that have already corrected, that are already in correction mode, they're going to go down even further. There is no end in sight. I've seen it happen a million times. You can say, "Oh, the stock is already decimated. It's down 20% from its highs." Like even Miracle Grow. Let's use them for example. They're down from 250 down back to 145, right? But if we have a correction, they're going to go down. They're going to continue to go down. Okay, even though they've already corrected, they're in major correction territory for no reason, unless there's a major rumor out there that we don't know about. Okay, someone knows something that the general public doesn't know, and just keep pounding the stock. I've seen that happen. Okay, but it's been over 6 months now since, not yeah, close to 6 months now, where it's been on a downward trend with all positive news. That doesn't make sense, but use that as an example. I've seen that happen in the past. Okay, but stocks that that are going to that are going to continue to get hurt with this pandemic, really, travel and entertainment stocks, your hotels, your even energy stocks, because eventually, if we do have continued lockdowns, they're gonna get hurt. I don't see any more continued lockdowns in the United States, but let's look at what's going on globally. Look what's going on in Australia. Look what's going on in Germany. I mean, it's with these continued lockdowns, people are stuck at home. Well, they're not using gasoline, they're not traveling, they're not using the airlines, they're not going staying at hotels, they're not enjoying, regular everyday, going for picnics or going to the movies. They're not doing so. Production stops in major parts of the world now. How much does Australia contribute to the world economy? Probably not much. But if a Germany or a France, uh, you know, do that, eventually it's going to catch up and have an impact.
What industry, if you think there's anyone that stands out to you, or multiple or sector, that's undervalued right now? I know I was looking at some healthcare companies, and they have low PE ratios, like you're
Right.
relatively low compared to the rest. We'll say Johnson and Johnson, AbbVie, to name a few, Pfizer. I know that's been
Right.
running up a little bit. What are your thoughts?
If healthcare stocks, I've stayed away from for a very long time. They've always had a low PE ratio, and you can look at Pfizer. Look at Pfizer's probably at its all-time high from 30 years ago, 30, 40 years ago. I tend to stay away from the major pharmaceuticals, because they are uh, they spend trillions in cash every year just on research and development.
Hmm.
And yes, they have their breakthrough product. And let's use Pfizer, Viagra, for example. That's when the stock shot up because of Viagra. And whenever they have a breakthrough drug, the stock goes up. But then I used to own Pfizer years ago, and I bought it. I remember buying it at 25, and I think after 8 years, sold it at 35 or 33. It's you buy it as a dividend stock. It's a no frills stock. If I was going to do anything, it would probably be with Johnson and Johnson, because they're more diversified. You know,
That's what I was gonna say. Johnson Johnson is
yeah,
definitely my favorite, just because it's almost like a
right,
healthcare index fund. I mean, they do it all. They've
right,
got the prescription drugs, they have
right.
surgical equipment, they have everything in your
Yeah, yeah,
bathroom
yeah.
closet and pantry.
So
Uh, so yeah, I like
yeah,
J&J, but that's a really good point. And they're very cyclical. I mean, same thing's happening with AbbVie right now. They're losing their patents on
right,
Humira, and
yeah,
that's makes up an insane amount of their revenue. So they had, it's kind of back to the
that's right,
drawing boards. I know they made some
that's right.
acquisitions, but
They're very cash intensive